From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 16th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. I'm going to highlight some of the key levels that we'll be looking for entry and exit opportunities. We start out the week with a relatively light news calendar and a U.S. bank holiday today. But be sure to check your financial calendars as we go throughout this week, because there are some days that have some significant trading events. And as always, you want to be sure to use appropriate risk management strategies in all cases. And I think one other thing that we need to be aware of is the environment, the current market environment that we're trading in, especially this week as we go into the U.S. presidential inauguration week. There could be policy and information disseminated that could cause the market to either go into a panic or into a run. So just be sure you're aware of what's happening in the current environment and the political environment that's happening here in the U.S. as we go throughout this inauguration week. Let's get started here on the USD. Actually, let me jump on over there. USDCHF, US dollar versus the Swiss franc. Daily time frame is what we're looking at. We've been studying over the past couple of days in the live trade room the two boxes up at the top of the chart. The black box being where the market is contained right now, the red box at the very top of the chart. In fact, on Friday, we started looking at this somewhat like a head and shoulders pattern, where the black box is the shoulder level, the red box is the head level. If that plays out, we have to be aware, of course, the market doesn't always have to do that, but if that kind of head and shoulders pattern plays out, we look for a reversal, we look for this to go down, and I think likely the first thing that's going to give us a clue to that is a breakdown of that black box, a breakdown of the yellow shaded area and the 1.007055 level. That's going to be the key component to any reversal or continuation lower. Now, if you're a seller, of course, that's interesting, a break of that yellow shaded area. The other reason to go short or sell this pair this week would be a rally back into the orange shaded area at the top. So you want lower risk and higher reward. You want high probability. So a rally to the orange zone or a break of the yellow zone would probably be your very best opportunities to go short, looking for further reversal for the US dollar and a sell-off of the US dollar. Now, on the other side of this is if the market starts to go positive for the US dollar, if we start to see a nice surge in a positive direction, there's two reasons to focus in on this as well. That would be a dip down here into the yellow zone as support, as we've seen for the past several attempts as support here, 0055, 0070. Or the next thing, we look for the break of the pattern and we look for it to get above the orange shaded area, which is 10160, 1.0185 is the orange zone. The green zone, kind of like that hinge point in the middle. I don't think trading around the green zone gives me a lot of confidence, but it may, as you go down here to the 4-hour time frame, we can see it sitting on top of that green shaded area today. So that becomes an interesting prospect for in intraday trading scenarios. If you're looking to go long, sitting on top of this green shaded area, obviously historically has seen support on top of that green zone. So that may give you some intraday confidence if you're looking for a long scenario. Of course, that breaks down if it pushes back underneath the green zone and the 0095 1.01 level, which is underneath the green shaded area. So sitting on top of it, maybe a continuation higher. Again, keep in mind the environment we're in, the inauguration week, and of course today the U.S. bank holiday. One interesting aspect is the Forex Black Book is still red and still showing bearish momentum. So if that continues, we'd look for further opportunities to go short on rallies to resistance or breakdowns of support, but keeping in mind the trend can always change, especially in these high risk environments. Let's go ahead and zip it on over to the euro dollar. Similar situation here. The two boxes on the chart show us we're in a similar situation. If we're looking for reversal to go back up, we're looking for this inverted head and shoulders, support at the bottom, support in the middle box there. And of course, a continuation of that reversal would likely mean a break above the blue shaded area in our last resistance high. If you're looking for buy scenario, also looking at the yellow shaded area at the bottom as your support. And again, that hinge point right in the middle, the purple zone, becomes kind of an interesting area, maybe for some intraday trades. A breakdown underneath it could signal some further back down towards the yellow zone, or sitting on top of it could just see the market rally back towards the blue shaded area as your resistance. On the other side, if you're looking for the return of the dollar strength, a return of the sell-off here on the euro dollar, you're selling the blue zone, you're looking for a breakdown of the yellow zone and a breakdown of this pattern that we just discussed around this black box. Some interesting aspect here is that the Forex Black Book went from red to green this week, which is again now just the opposite of what we looked at on the dollar franc. So I don't know if I'm ready to trust that, but that could be our first clue that momentum is shifting back to the other side, back to the upside here for the euro dollar. Moving on over to the GBPUSD, of course, the market opening much lower today than we closed out on Friday. It's a significant push down into multi-decade lows that we have not seen for quite a long time here for the GBPUSD. I would probably just zoom it in here like this and just pull back just a bit so you see that black box on the left-hand side, the supports that are inside that black box and the blue shaded area. That blue shaded area is 1.2100, 1.2130. So if you're looking to go short because of the current bearish momentum, the current sell-off that we're seeing here on the GBPUSD, I think always, especially at multi-year or multi-decade lows, I would like to see a rally back into resistance, likely at least the 121 level if you're looking to go short. Maybe a little bit higher towards the 121.60, 80 level, the green shaded area here. But if you're looking to go short, you needed to go up and get away from these multi-decade lows before you have an opportunity to go short. And at least at this point, I really have no suggestion for going long on the GBPUSD. Take it over here to the USDCAD. We saw last week a little bit of a change where we've been rising along the blue trend lines, dipping along the red trend lines into the blue trend lines, and rallying off of there. You can see that going back in time. Dip, rally, dip, rally, dip, rally, dip, rally. And last week we saw it congested into those blue trend lines, the black box on the right hand side of the chart, and finally the market was able to break through those two blue trend lines and continued all the way down here in towards the 1.3000 level, the pink shaded area in the middle of the chart. I think that's still the trend. The downside is the trend. Forex Black Book is red trend line. All of that tells us we're still in a downtrend. If you're going to trade this currency pair, at least at the current moment, it still makes sense to go short, and there's no real significant reason yet to go long, but that makes the most sense. Let's go ahead and zoom it in one time here. If you're looking to do that, at least at the current moment, you're looking for it to stay underneath this blue zone, which is 1.3145 to 1.3165. If it breaks through that blue shaded area, we could be looking for some intraday reversal back here towards this green zone. Let me see if I can get that selected and pulled over a little bit. Just give me just a moment here to grab a hold of that green zone and pull it over here like this. So that becomes your next resistance. Obviously, it was support over here on the left, and that would also be challenging underneath the two blue trend lines, by the way, if it does come back up underneath there. So if you're looking to go short, you need to stay under the blue zone or maybe a potential rally to the green zone before going short. Now, if you're looking to go long, which is a possibility, if you look just a few days ago, this candle right here with the long wick and the small body, if you're interpreting that as a hammer candlestick, then we're looking for probably the break back above 131.65 to give us some upside expectation. Let's take it down to the 4-hour time frame. Take a look at that blue zone. That's very interesting, isn't it? How the market is just sitting underneath there. So for the day today, two opportunities here. If you're looking to go long, it's got to break through 1.3165. If it doesn't, no reason to go long. Don't buy it unless it breaks above the blue shaded area. If you're looking to go short, obviously we're into resistance. The market's finding resistance, and this becomes your opportunity for the day today to go short. We don't have, well, actually right here we do have a little yellow arrow with the Forex Black Book, but I'm difficult to trust that because it's been so long sitting underneath that blue zone. So if you're selling, this is the opportunity to do so here into the blue shaded area for the US CAD. Let's take it on over here to the US yen. The yellow shaded area is most important. 1, 2, 3, fourth day now. Fourth day finding support right around the 114 level. We're looking at 114.15, 113.85 is the yellow shaded area just up here at the top of the chart. If I take this little blue trend line right here that's sitting here and just expand that out a little bit, you can see that blue trend pressuring the market down, and just at the bottom of that, we're into that yellow zone. We've seen congestion here before. Look back to the left-hand side where the black box is, congestion around that same 114 level. If you're looking to go short, if you're looking to sell the US yen, when do you sell it? Let me zoom in one more time. When do you sell it? If you're looking to go short on a currency pair, you don't go short on top of support. That doesn't make sense. I've already identified this now as support. If you're looking to go short, there's two reasons to do that. You either wait for it to go back to resistance, which I think is up here towards 115 in the pink shaded area, or it has to break that barrier of support, which is under the yellow zone, underneath 113.85. So don't go short unless it goes back to resistance, pink zone, or breaks underneath the orange zone. Next opportunity could be looking for support and reversal. It is interesting, Forex Black Book is red, which gives us a bearish bias. So if you're looking for that, I think it will likely need to go up to the pink zone before you have an opportunity to go short. I don't think you're going to get a new signal for the Forex Black Book, even if it breaks through the yellow zone. I think it's just going to start going down without a new signal, unless it makes a rally back higher first. So going short, again, pink zone or under the yellow zone. Watching for support and reversal here, possibly here for the yellow shaded area. If you're looking to go long here for the dollar yen, if you see any positive news for the U.S. this week, or if the U.S. dollar starts to gather strength again, you're looking for support at the yellow zone, and possibly a break above the pink zone begins a new change of the trend pattern, where along the blue trend line we have had lower highs. What we need to see is a change of that pattern, a break of the pink zone for the US yen. Moving on over here to the AUDUSD, we are rising along the blue trend line, but for the past 3 days at least, we have found resistance underneath the 100 period simple moving average. And in fact, last week in the live trader, we were selling the green shaded area, made some profit from the green shaded area, the 74.95, 75.15 level. So very interesting level here with the 100 period moving average. We've seen resistance here before. Just look back here where the blue circle is. So if you're looking to go short, obviously that's the place to do it. If you're looking to go long, which I think could be an interesting prospect this week, it needs to break through the green zone 75.15 or possibly dip back down to the orange zone. Those are your two opportunities to go long. Down to the orange zone or above the green zone. Interesting is that this is the first day we've seen the Forex Black Book down here at the very bottom go green. With this rise along the blue trend line, it's turned green. So that could be our first clue, or next clue, I guess, of a shift in momentum. So watching for buying opportunities means we needed to dip down to the orange zone or break above the green zone. Now, if you're going to continue to play the longer term moving average here, the 100 period moving average, then of course that's close as possible to 7,500 to minimize your risk for the AUDUSD. Moving on to the NZDUSD. Similar situation here over on the NZDUSD. You can see the 100 period moving average last 3 days held underneath there as resistance. Red trend line's interesting because we're still toying around with that. We have two different trends here that we're dealing with. The rising blue trend line, which is where we've been over the past couple of weeks, running into the 100 period moving average, or the falling red trend line, where we saw the rally towards it, the fall, rally towards it. Are we going to see the turnaround in the fall again? I think we need further evidence of reversal if that's the case. Take it down to the 4-hour time frame. Look at the congestion we're seeing here. I expect that at least at this point, it's more predominant bullish trend unless we see some sort of gathering of strength, the buyers coming back for the US dollar and the US dollar taking a significant turn for the positive. I think you probably want to focus your efforts in on dollar shorts at the moment. And that would be buying support, which at least at this point is as close as possible to the purple shaded area, maybe as deep as the orange shaded area down here, closer to the blue trend line. But clearly, if it doesn't do either one of those, purple or orange, the next thing you're looking for is the break above the blue zone, and that continues the upside behavior. Again, take a look. Forex Black Book turning green this week could be our first clue that we're seeing a longer term shift in momentum here for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.